Delayed gratification, the secret behind wealth and success. Why do some people become millionaires while others stay broke? The answer isn't talent, it's one habit called delayed gratification. What is delayed gratification? Delayed gratification is giving up small reward today so that you can enjoy a bigger reward in future. It is the ability to say not now to something tempting because you know waiting will give you much better outcome. Gym transformation. No one gets fit after one workout. You exercise, eat healthy, stay disciplined for months. One day you look in the mirror and realize how much you have changed. Small daily habits create big long-term results. Saving 5,000 every month instead of buying unnecessary gadgets. Studying for exam instead of scrolling social media. Investing in quality companies instead of chasing quick profits. In investing, delayed gratification is one of the most powerful habits. Instead of trying to make money overnight, patient investors allow time and compounding to grow wealth. Two students have an exam in 1 month. One studies 1 hour every day. The other spends month watching videos and tries to study all night before the exam. The first student stays calm and performs well, while the second struggles. Success comes from preparing early and not rushing at the last minute. Everyday example of delayed gratification. Delayed gratification isn't just about investing. It is something successful people practice daily. Saving instead of spending. You receive 20,000 bonus. Instead of buying the latest smartphone, you invest the money. Years later, that investment will be worth much more than the phone you wanted. Studying instead of scrolling. You choose to study instead of spending that time on social media. The reward isn't immediate, but better grades and career opportunities can follow. Exercising instead of staying comfortable. Skipping a workout feels good today, but exercising consistently leads to better health, more energy, and greater confidence over time. Eating healthy instead of junk food. Choosing nutritious food or fast food may not feel exciting in the moment, but it helps you build healthier body and avoid future health problems. Investing instead of shopping. Instead of buying clothes or gadgets every month, you invest that money in quality companies or mutual funds. Over years, compounding can significantly grow your wealth. Learning a new skill. Spending an hour each day learning a valuable skill may not reward you immediately, but it can increase your income and opportunities in the future. Delayed gratification in investing. Investing is one of the best example of delayed gratification. You want quick profit. You buy stock and hope it doubles next month. But successful investors understand real wealth takes time. Invest regularly. Imagine investing 10,000 every month through SIP in mutual funds. In the beginning, the growth seems slow, but after 10, 20 or 30 years, compounding starts working like a snowball, creating significant wealth. Hold great businesses. When you buy shares of high quality companies, don't expect quick returns. Give the business time to grow. As profits increase over years, the value of your investment can grow as well. Ignore daily market noise. The stock market moves up and down every day. Patient investors do not panic over short-term declines. They stay focused on the company's long-term performance over daily price movements. Let compounding do the heavy lifting. Compounding needs one ingredient above all else: time. Every year, your returns could start generating their returns, creating exponential run over the long run. Avoid chasing quick money. You jump into hot stocks, tips, or speculative trades, hoping to get rich quickly. This often leads to poor decision and losses. Long-term wealth is built on discipline, not excitement. The biggest secret isn't finding magical stock, it's patience. You will not become world's richest person overnight. You start investing now and stay invested for decades. Most of your wealth will come after the age of 50 simply because you allowed compounding to work for a very long time. The stock market is a device for transferring money from the impatient to the patient. That means if you constantly buy and sell based on your emotions, you often lose money. While the patient investors who hold great businesses for years are most likely to succeed. Invest in quality business, not just popular stocks. Think like a business owner, not a trader. Don't panic when the market falls. Give your investments years, not weeks to grow. Let compounding do the heavy lifting. Getting rich is not about finding shortcuts. It is about making good decisions and giving them time to work. The big money is not in the buying and selling, but in the waiting. This means greatest profits comes from holding great businesses for years and not from constant trading activities. Be patient. Great investment needs time to grow. Indian examples of delayed gratification. You think wealth comes from finding the next multi-bagger, but in reality, some of the greatest fortunes were created by holding great businesses for years. HDFC Bank. Investors who believed in HDFC Bank's strong management and consistent growth and stayed invested through market ups and downs were rewarded over the long period. Reliance Industry. Reliance has transformed itself from oil and petrochemical to a diversified businesses such as telecom, retail and digital services. Tata Consultancy Services. TCS has consistently generated profits, dividends and grown its business over many years. Asian Paints. Many investors overlooked Asian Paints because paints didn't seem exciting, but the company kept growing for decades. Titan Company. Titan expanded from watches, jewelry, eyewear, other lifestyle businesses, generating tremendous long-term value. If you would have bought these companies and hold them patiently for years, you would have done much better than constantly buying and selling based on your emotions. The biggest winners in the stock market are not the smart traders, but the patient investors. The cost of instant gratification. Instant gratification feels good today, but it can cost you future wealth. You spend years chasing quick pleasures instead of building long-term success. The result, more stress, more debt, and fewer opportunities. First, buying things you do not need. You see the latest phone, expensive clothes, luxury gadget, and you buy it immediately. The excitement lasts few days, but the money is gone forever. Credit card debt. Buying now and pay later seems convenient, but high interest debt can keep you trapped for years. Instead of your money working for you, you are working to pay interest. Chasing quick profits. You buy stocks because it is trending on the social media or because someone has promised you guaranteed money. When prices fall, fear takes over you and you sell at a loss. Daily trading without a plan. Trying to get rich every day often leads to emotional decisions, higher cost and unnecessary risk. Excitement is not the same as good investment strategy. Ignoring the power of compounding. Every rupee spent unnecessary is a rupee that cannot grow through a compounding over next 10, 20 or 30 years. How to build delayed gratification? Delayed gratification isn't something you are born with. It's a skill you can develop through daily habits. First, set clear long-term goals. Know what you are working towards. Whether it's financial freedom, buying a home, or retiring early, a clear goal can resist short-term temptations. Pay yourself first. As soon as you receive salary, invest a fixed amount before spending on anything. You won't be tempted to spend money that's already invested. Automate your investments. Automated investment can remove emotions and make you stay disciplined and consistent. Follow the 24-hour rule. Before buying something expensive, wait 24 hours. Most impulsive purchases lose their appeal after a day. Avoid temptation. Unsubscribe from shopping emails. Avoid social media. Avoid seeing daily stock prices. Focus on habits, not motivation. Motivation comes and goes. Good habits, saving, investing, exercising, learning every day, creates lasting success. Think about your future self. Before spending money, ask yourself, will this make my life better next year? Or am I just satisfying a temporary desire? Celebrate small wins. Every month you stick to your investment plans. Avoid unnecessary spendings or achieve a saving goal. Celebrate your progress. Small victories build long-term discipline. Delayed gratification is the foundation of long-term success. The ability to wait is often more valuable than talent. Patience beats prediction. You don't need to predict the next winning stock. You need the discipline to stay invested. Compounding rewards those who wait. Time is one of the greatest wealth building tools. Avoid the trap of instant gratification. Every unnecessary expense or emotional investment decision can delay your financial goal. Focus on quality, not speed. Successful investors think in decades and years, not days. Small disciplined action creates extraordinary results. Saving, investing, learning, staying patient every month can transform your financial future. Your future is created by the choices you make today. Every time you choose patience over impulse, discipline over emotions, and investing over spending, you are building a richer and freer life. Remember, great wealth isn't built overnight. It is built one smart decision at a time.